Hey, best ever listeners. Welcome to the best ever CRE show. This is Beyond Multifamily. I'm Amanda Cruz, joined with Ash Patel. Don't forget, this is Beyond Multifamily, and we drop a new episode of Beyond Multifamily every single Wednesday where we discuss retail, industrial, office, mobile home parks, not multifamily. So make sure you listen in every Wednesday. What's up, Ash?
Hey, Amanda, how are you doing?
I am good. How are you doing?
I'm well. Give you an update. We just talked a little bit a few minutes ago, but I'll share this with the best ever audience as well. We are opening our bar next week. We're doing the friends and family opening probably Thursday and then opening on the weekend. So this was a year in the works. Excited. We took a building that probably should have been torn down and revamped it. And it's going to be a 90s, 2000s bar. So 90s and 2000s.
I love the
music.
theme. I don't think we knew that. So I interviewed you a while ago when you were first getting into this deal. So go back and check that out too. That was an interesting episode. And now, so you didn't have the theme though. That's amazing. What a good theme.
Yeah. And I know nothing about running bars or restaurants or themes, or I can't design anything. It's my partner in the bar business. He figured out that the 90s, 2000s had the best upbeat era.
Music.
And it was also a huge mix of anything from grunge, alternative, pop, rap, hip hop, top 40. Whereas 80s was a lot of either falling in love, breaking up, first crush, different genre. Plus,
you know my thoughts on 80s music. You subjected me to plenty of that in Nashville. I can live without 80s forever.
80s rock. Just because I'm older than you. So then, you know, the newer hip hop stuff, the stuff my kids listen to is unplayable in a public setting because it alienates a lot of people, right? The lyrics have gotten out of control.
Heck yeah. You made everybody's dream come true. I went to college in, you know, the 2004 to 2008 timeframe, and it wasn't everybody's dream in college. Like, I could own a bar. I would own a bar. I'd do it so well. Like, you are literally making everybody's dream come true. That's amazing. Yeah, and I'm going to interview you again in a few months once it's open because we want to hear how it went. We know your other bar adventures in the past didn't go so well, and you structured this one differently, and you have a good feeling about it.
Oh, yeah. I've screwed up a lot in this business. And again, I don't want anything to run these places. Unlike, you know, these internet superstars that tell you to go buy businesses. Do not buy a bar. Do not buy a restaurant. Partner with somebody that's got a great track record. So that's a big thing on our plate right now. How about you?
Looking for deals. We're about to sell one of our mobile home parks, so that's about to close. And actually, I'm selling a couple other little land things here and there too. And we just got good news on our warehouse. We had a tenant. We have a Fortune 100 tenant in there, but they were on short term. They're 1 year with a 1 year option. And they just informed us they will be executing their 1 year option. So that's good news. We really like them. Obviously, they're Fortune 100, which means we will hold through their term, attempt to get them on a longer term lease at the end of the option year before we would sell.
That's a huge win because they just needed a stopgap, right? They needed a temporary place.
They wanted to build new business in this market. They took a risk, so that's why they did the short-term lease. They said business is going well. They want at least their 1 year option. So let's hope business keeps going well and they extend for a longer term after the next year. We'll see.
Have they made improvements to your building?
Not a ton of improvements. Okay. We had to put in a new AC, like a new HVAC, which we knew was coming. It was 22 years old. And they paid for a portion of it, which was what our lease called out. But otherwise, nothing too crazy. No.
Okay. The second that they start remodeling and putting improvements into your building, that's awesome because that's when you know they're committed. So
yeah, that is true. There's not really much to add to a 10,000 square foot warehouse, but hey, happy about that. So we have Ira Zlotowitz today. We just interviewed him and it's a crazy conversation. I honestly thought it wouldn't last that long because he has a brokerage where they go and find the best rates. And I mean, really, how long can that conversation be, Ash? But it was really fascinating. What did you think?
I wasn't excited about this either. Just a mortgage guy, right? But he's not a mortgage guy. He's trying to usurp the entire mortgage industry. He's got a really awesome product. Everybody should listen to this. I'm going to use him on my next deal. He tells a very compelling story. I end up shitting on a lot of lending brokers in this episode. And look, I just speak my mind. So this was a fun interview.
And if you buy commercial real estate, you need to listen to this. And if you are a broker, you definitely need to listen to this because he is coming after you. All right, let's go. Let's bring him on. Ira Zlotowitz, welcome to the Best Ever CRE Show. How are you doing today?
Amazing. Great to be here. How are you?
Hey, we are good. We're looking forward to chatting with you. Before we jump too far in, give the Best Ever listeners a bit about your background and what you do now.
So my background is I've always been in commercial real estate finance. I like to call myself a trusted advisor as the industry has gone more in the direction of, tech, people going direct, AI. God popped into my head to try to build the future of commercial real estate finance. And we opened up a company called G-Parency. And G-Parency is mortgage assurance. For a fixed fee of $4,500, I shop someone's deal, guarantee them the best financing, and then they could close with their broker or direct. So I'm not a competition to anybody. If you like brokers, stay with them. I'll give you mortgage assurance. You want to go direct? Go direct. Let me provide it. And we opened up a company for those who go direct, a subsidiary that we license all of our banking contacts, my Rolodex. Someone wants to literally go direct. Here's all my contacts and take it from there.
Dang, Ira, I love it. You just jumped right in. And
that was your request.
I love it. And we have, I guarantee, a couple Best Ever listeners that are like, what the hell just happened here? So let's rewind it a bit. Tell us about what goes on with mortgage brokerage. Like, what is the lay of the land with that? And then we can kind of overlay what you do in that space.
Got it. So the mortgage brokerage space is that when someone owns commercial real estate and they need to get financing, they have two options. They could go to a bank direct or shop it to a few banks themselves, or they can engage a mortgage broker. Traditionally, when they would engage a mortgage broker will not take up any upfront fees, will work on total speculation, and upon closing the transaction, they will earn a fee or negotiated fee of 1% of the loan amount. So I like to tell people who aren't good with net math and numbers, what's 1%? So, when you brought up you're supposed to give charity at 10%, to just take off 10 at the end. 1% is take off 2. So, $1 million deal, $10,000 would be a fee. So Ash.
Yeah, Ira, how are you different than the typical mortgage broker?
Right. So the typical mortgage broker, I'm only different in two ways, and I work alongside them. Number one is that there's no commission. I get a $4,500 fixed fee to do my job. And number two is that a regular mortgage broker goes all the way to the closing. I stop after the term sheet is signed. Because what I found is that a real estate owner, when you ask them, what's your pain point? I just want to get the best deal. Can you run a deal by yourself? Can you talk to the bank afterward if I introduce you? Of course. Which bank should I go to? Create the competition for me. I said, okay. So I'll work like a debt diligence, like I work like your attorney. You pay your attorney a fixed fee, you pay me a fixed fee, irrelevant to how big the deal is. So the difference is someone wakes up in the morning with a pain point. I'm not getting the best. I want someone to help me. Even if they're using a broker, stay with your broker. Let me create competition and no ulterior motive on giving you advice. So a lot of times people say, which bank should I go with? And the broker has an ulterior motive because he makes more money if he goes to this bank versus that bank. To me, it doesn't make a difference. So an owner calls me for that. That's the difference.
All right. You sound like you're from the East Coast. Is that right?
I don't know where you got that from. I'm from the South.
You're from the South. Okay.
Yeah.
You're from the East Coast, right?
Yeah.
So how are you better than my local broker that knows the banks here? He knows my deals. We've been through several deals together. And let's say I do an office deal all of a sudden. He knows which lenders are lending an office in my backyard. What gives you a competitive advantage?
It's a great, great question. But if you notice in the words that you said, he knows which lenders. That's a knowledge-based product. So really, if the issue is about knowledge, for $5.99 a month, I'll give you access to my lending contacts and what they do. Here's the reality today, different than 10 years ago. The reality today is that there's three of us on the call. If I call up a bank, Amanda calls up a bank, and Ash, you call up a bank. We will get the exact same quote at that bank. So there's no difference. It's a knowledge game. The difference is he may know, or I may know 14 lenders, and you know 3 lenders. So, but the top 3 lenders are the same rate across the board. So the old me used to fight you and argue with you and say, hey, you don't need a broker. You do. Now something. You believe you need a broker, and your broker is great. Stay with your broker. But do you think you're getting the best? Say, no, not the best, but I like my broker. Okay, stay with him. I'm like an insurance policy. For $4,500, trust me, he'll work a little bit harder when I'm in the ground. I'm in play. Plus, I'll shop to the broader market. So you just have to look at it. If you think I'm going to save you a couple of basis points a year, you may back you $4,500. You ask me what I honestly believe. There's no difference. No one's better anymore. It's the once someone's good, they're professional. Wasn't one attorney the next? They're the same. If you have a good attorney, they're the same. Same thing is over here.
So for $5.99, is that per year or per month?
To get my data is $5.99 a month or $5,000 a year. I'll give you, the company name is G Placer. It's a subsidiary. I'll give you unlimited access to all my bank contacts with filters. So you could say, hey, in the South, office building, $14 million, give you a list of the banks and the bankers.
Now, when you said data, is it data on recent loans? So really right now, there's an issue with lenders' appetites for office. So will your data help me find an office lender in Baton Rouge or Cincinnati?
Yes. So so here's how lending data works. Okay. These are mortgage brokers do the same thing. If you wanted to find a lender in Baton Rouge, you could go onto Google or ChatGPT and say, who's a lender that lends an office in Baton Rouge? And it'll give you a list of lenders, either are based there, list of lenders on their website, they mention office, a list of lenders that could have had a recent closing that they have their name there. It'll give you a list of lenders. It might give you the right contact number. You can call them up. What a mortgage broker is really doing is going through that list one time and then indexing and putting it to their database. And then they file with the lenders and they get the correct phone number. So there are lenders that are saying they're doing office. Yes, they used to be 80% loan to value. Now they're maybe 65% loan to value. They used to only go the loans up to 20 million. Now they only want to do loans to 15 million. So what's really happening, what my database really has, is a combination of 3 things. Number 1 is public data. I purchased all the public data of every single loan that was done in the country. So I could tell you which lenders lent on office buildings in Baton Rouge, number 1. Number 2, I have a team that's constantly calling, and lenders are able to live update their lending profile. I lend in Baton Rouge. I don't lend in Baton Rouge, office, retail. I'm a bank. I'm a life company, all the different lending sources. And number 3, which makes me really unique from all the other people selling data, is that my data is actually used by several mortgage companies that give all their feedback. So I have live feedback. When a lender says, I'll lend in Baton Rouge, and all of a sudden I send them a deal that says, why'd you send me this piece of crap? I don't want in Baton Rouge. You just said you live in office. No, if it's a Class A office building, everything is perfect, fully rented. So you don't live in Baton Rouge, basically, So the data gets updated, and that's really what happens. So if someone says, Ira, I want access to your data, and it's live updated every single day, and they can put the filters, like my Rolodex with a filter, they could say Baton Rouge office, and I'll bring you all the office lenders that are lending in Baton Rouge.
Ira, why aren't mortgage brokers just using your data to improve themselves so that customers don't need to go to you and to them?
Right. So the answer to that is as follows, is that we just rolled out selling the data direct to brokers recently. And it's starting to pick up. I just recently hired a sales team of 15 to 18 salespeople to sell to brokers and owners who want to go direct. So for that reason, I look at it a little bit differently. They call up an owner sometimes. An owner says, they tell an owner, you getting the best financing? No, but it's close enough. I said, listen, we sell data. You want me to sell it to your broker? So the brokers are finding out about this. But for a broker, think about it like at home. You could have Netflix, you could have Hulu, you could have a few services. The good brokers subscribe to every data provider because they're charging these huge fees. They could be charging an average fee of 6 figures at a time. They should be investing in multiple data platforms. So that's what I'm recommending. And it's the price point. My price of $5.99 is for a whole company. It's not just, they can have access to the whole team. It's not just for one person to use. But that's the goal, change the world this way.
Ira, you said you stay with the buyer until the term sheet. So what do you do differently than I would do if I had your data and I knew these are the top 3 lenders in the area? How do you add value beyond what I can do?
So just to take a step back for a second, is that there's three options: do it yourself. Before I came onto the scene, is do it yourself. Here's data. There's a full-fledged broker. You pay nothing until it closes, and then what I call in the middle mortgage assurance, where you could either way. I could help either way you're going. It's all about the negotiations and the timing. So the art of the deal. I was fortunate enough to build the company prior to this. Was number 3 in the country in transactions, number 10 in dollar amount, was brokering $5 billion a year. And what I learned about this business is that there's a certain way to approach how you want to shop a deal to a bank. So Ash, let's flip the narrative a little bit. If I called you up and I said, I have an off-market deal. You want to look at it? You want to look at it? You can say, yes, I want to look at it right now. I'm going to drop. I'm on vacation. If I told my wife, that's it. I'm focusing. I'm doing it, right? But if I told you, by the way, Ash, I'm sending it to 100 other people, what are you going to do? Hell with it. I'm staying on my vacation. I'm not wasting my time. The way it works with banking is that the real top brokers or an owner direct, you can't be shopping it to more than 3, 5, 7 lenders. Because then, like, you call up a lender, you're only going to one guy. Like, how many deals do you do a year? 3. So if you shop a deal to 7 lenders every time, that means 4, and you went each loan some of 3 other banks, that means 4 lenders are pissed at you. So it doesn't work fully that way. Over here, when I come into a lender now, I go to the broader market because I can say, listen, you want to break into Ash? Ash has his 3, 4 banks he's going to. Ash thinks he's getting this rate of 4%. Because I'm not getting a commission, I work with you. I'm like your in-house team outside. I go out to the other lenders to say, hey, do you want to win Ash's business? Here's your chances next deal. You're probably not going to win this deal. One of them comes forward a little bit better than your current offer. Because I'm not incentivized based on using my bank, but what's best for you, I could have you work on this deal, go back to your existing lender. They'll match it. You want a better deal, and everyone's happy. Deal number 2, now you know who you call the older one. You go rotation with that new lender. So I tell you, it's not about better. It's just about timing and creating the competition. Good cop, bad cop. For $4,500, it's worth your time no matter what. But for the same work for $100,000, that's become. But I want to say one thing. 80% of people go direct. 80%, and 15% that use a broker just to shop. 5% are married to the broker. Like that broker, their partner without equity. You know what I mean? Like I don't make them move it. Those are the brokers I work the best with because they're high quality brokers. There's no different than what I could do and they could do. But they appreciate the fact, I don't want to shop at the 20 banks. I don't want to waste my time. So you do that work. We'll tag team on the competition, and then once we have it signed up, you go your way and I'll finish it up.
They can't really like you. All these other brokers, you have to be seen as competition. It's not a collaborative relationship, is it?
So if you look at it as follows, almost every owner that uses it, let's not wear the hat, you don't go direct, use a broker. Almost every owner that uses a broker, almost everyone shops their broker. The difference is, the real question people ask me is, like, why would I pay you $4,500? I could just go to another broker. He'll shop it for free and create competition. That's a great logical point. However, the second broker only makes money when he closes. He knows he's never going to win. Since the market is so efficient, he knows the first broker is going to bring a rate of 6%. He'll bring a rate of 5.9. But then you're going to go back to the first broker. He'll match it. And the second broker helped you and walked away. He's not going to waste his time. He's not going to work so hard. When I'm getting paid a fee to do my job, like you have a worker, I'm your in-house worker. I'm going to shop the deal because I have a job to do it. Create that same. I'll bring the 5.9. You're happy. I'm happy. I got paid my fee. You got paid 10. You saved 10 basis points. So a broker looks at me a little different. A broker says, if I'm ready to have competition, I'd rather G-Parency be my competition. Because even if G-Parency brings the winning bid, the client's still closing with me. As opposed to if the new broker brings the winning bid. So do they love anyone in the space? No. But if they can have someone in the space, they'd rather be me than somebody else.
Ira, you just said something interesting and I didn't expect it. If you at G-Parency find a better term rate, whatever, they'll still close with the broker.
Or themselves. I'm done. I work for them. I don't care what they do. That's that.
Yeah, go ahead.
The real beauty of this whole product is I have no ulterior motive. Because here's the story. People say, what if you don't get me a better deal? I said, the goal is not for me to leave your bank. Here's where people make a mistake. The best situation for an owner is that he should have all the options in front of him, go back to the bank he has a business with for 20 years, see if they're willing to match it. And even if they're not, how many times a client calls me up now I can be honest with them. I have no ulterior motive. Client calls me up on a $20 million deal or $200,000 deal and says, listen, after we finish competition, my bank's at 5.9. I know you have another term sheet at 5.8. What should I do? I think you should stay at 5.9 with this bank. But if I was getting a commission I closed, I'm the same honest person, but you have 100,000 reasons to steer them a different direction. But that's not really the right relationship. And banks like me also have never wasted their time. See, I'm never playing with any banks. I tell them up front exactly what's going on. Ash has this offer. Do you want to waste your time matching it? And every once in a while, like we emailed someone in the middle of Texas, he goes, Ira, let me tell you something. You know what I'm looking at right now outside my window? That building. Yes, I'm going to compete. I'm winning it because I don't want to look at my competitor doing a loan in that building.
Ira, Amanda and I are big value add investors. So we're not buying the Whole Foods Class A strip mall. We're buying stuff with hair on it, vacancy, deferred maintenance. And
there are such deals like that? I thought everything was perfect.
Well, local lenders for those deals are ideal, right? And big banks are not going to touch those deals. So where do you add value in a deal like that?
So number one is I'm going to the same local lenders. But do you know that on a typical deal, if you would type in a value add multifamily or value add retail deal or commercial property, there's probably between 30 and 100 lenders that officially would like to lend on that property. You're going to the same 3 every time because you actually, the last guy got insulted, so you owe him the next deal, right? You fall into that trap a little bit. Good cop, bad cop. I could be the bad cop for you. What I'm doing when someone's engaging me is they're primarily engaging me to say, you know something? Do you believe that if someone called the next 15, 20 lenders, you're bound to get something that could be used for leverage that's worth $4,500? And 99% of owners say yes. That's really what I'm bringing to the table. It's a timing, and that you might find a new lender. Like I said, we might find a better rate, a better term, a better structure, a better bank. There might be one bank that wants to bank you today. You started your relationships when you weren't who you are today. There's a new lender who would love to see you for you are today. They only see you for 10 and say, wow, you have this track record? We want to bank you. So that's the goal. And also with my product, you could go back to the bank forever and you don't pay me any tolls. So if I introduce you to a new bank and you say, I love this bank, and you don't want to shop them ever again, so I'm one and done. I'm done.
Now, in order for you to pitch the deal to all these lenders, you have to have a full deck on the individual as well. So me as the buyer, you need all of my financials, track record, everything. Is that right?
No. So the reality is how the business works and always works. You see, when you go to a mortgage broker, because you're paying them a $100,000 fee or $50,000 fee, they have to show you a lot of things like really fancy. Let me show you this book they put together about you. They're going to come down to every site inspection. They're going to come early. A lot of this stuff, really just realize 80% of people don't use a broker. And the banks prefer no broker for many reasons. So really, it's really a teaser stage. I put together a basic package, a basic description on you. That's what gets the lender interested. If they're interested from that point on, as they start meeting you, you give it. This is my whole career. I did it this way. I don't overload the bank with information up front. They just give me enough. Give me a high level point. Should I want to do this loan? Here's a little bit about the borrower. Here's about the asset. This is what it needs to make the deal happen. I'm not going to waste your time. From 30 lenders teasers, 6 say yes. You keep going down the line. Once you meet them, that's when all this trading hands. And again, at that point, most banks say, I don't want a broker in between when you're giving all your detailed financials. The bank wants to get to know you. They don't want to come in through someone else that might polish it a little bit better. So that's where we found the best success. When I was conventional broker as a broker, I'm doing the same work I did when I was a broker and got paid at closing. The only difference is I stopped a term sheet signed and I got paid up front. That was the trade-off. $4,500. That's not really up front. I first do a free look. When someone calls me up, they send me the deal. I review it with my team. My team tells them from a high level what we think we could do. And then based on that, a client engages us. It's about managing the client's expectations, what I think.
You know, what's funny is we can't do that. I can't go to 5 lenders and say, hey, here's the deal. Tell me if you like it. They're going to say, yeah, give me your financials. And my jersey can come back out and be like, listen, I'm not giving you shit. You just tell me if you like the deal or not, or I'm moving on. So you get to do that. We don't.
No, the reason I do that because I'm selling it the other way. Say, I don't want to waste your time. See, you could also get it done. I'll tell you what the breakdown is. I'll educate when I train brokers, and I'm instead of training brokers, I'm training owners. That same way you could tell a bank, I don't want to waste your time. I need these terms. Is this something you'd even offer? If the answer is no, of those 5 lenders, 3 of them are going to tell you no. What's the best you could do? Assuming my financials are amazing, what's the best you could do? Then they'll answer you. And that's you want to narrow it down. And once you narrow it down to 2, then of course give the financials to those 2 banks to keep moving forward. It's how you present it and ask the question. They don't want to waste the time either. I almost got a patent on how to request information from a bank, but they said the patent office came back and said, this is not patentable.
Amanda, what are your thoughts? If you submit a deal to a lender, at the very minimum, they're going to ask for balance sheet and tax returns, right?
Usually they just start with personal financial statement. They'll get the
Yep.
other, I mean, they don't really ask for tax returns right away. It hasn't been a big pain point for me because, anyways, I created that PFS, right? I updated my personal financial statement. So who cares if I put it in 5 places or in 1? That hasn't been a big deal. It's more just like going back and forth on the conversation. If they ask for other documents, all that, that is a pain point. I can see, I think what Ira said there was really a little bit of a gold nugget. Like, look, can you even do this before I bother? Like, let's just get that out of the way and save my time and yours. I like that. But I don't have a huge pain point there right now.
I was saying on the going back and forth is that it's more like saving you time as the banker. I don't want to waste your time. I tell them negative. By the way, I have this bar very strong, but it doesn't have a lot of liquidity. Am I wasting my time? I bring out the points up front, the negative points up front, and I say, I don't want to waste your time. This is the story. Should we waste our time? He needs this. Once they say yes, the focus on the deal first. And then, but again, Amanda, in that case, it's the time. In the beginning process, it's a lot of back and forth. So I'm doing that back and forth on your behalf, and you're saying to yourself, for $4,500 is the blend at a time, some of the savings, honest advice. It's like an in-house team. That works for you.
Okay, so I think they would react differently to you than us, because if we go in there and just say, look, I don't want to waste your time, blah, 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 most loan lenders will just say, yeah, oh yeah, we'd love to do this deal. Not we can, not we have the appetite. We'd love to do this deal. And as a loan broker, it's their job to get deals passed through the board, the president, and that's how they get paid. So with you, they probably react differently because you're a professional. You do this day in and day out.
Okay, so Ash, this is where I'm happy that I'm at $4,500 a fixed fee. I can tell it to you. It's no longer true. It used to be. You never tried sending it the way I described it. They'll react the same way. They're human to human. They're just, people think these bankers are these special people. They're just like me and you. They have a job to put loans. Don't waste my time. You have a job to buy. I have a job to broker. They're the same. What used to be different is as follows. 10 years ago, origination ruled the roost. So if I brought Ash to a bank and a bank wanted to retrade, or I wanted a bank to do something for me, I said to the bank, listen here, if you don't close Ash's deal, I'm never giving you another deal. You know what happened? Miraculously, they came back 20 minutes later. I spoke to my boss. We're going to close. Today, you know what happens? Screw you. The credit doesn't make sense. Have a nice day. It's about you, Ash, and Amanda as the borrower. If your credit works, it's going to happen. It's a perception in people's minds. So therefore, I stop fighting you. Oh, you think you need that magic broker? No problem. Which magic broker do you want to use? Use him. I'll keep everyone in check for $4,500. I'm a side bet. I used to fight you. I don't fight anymore. I just tell you what I think. Do what you want. Doesn't make a difference. I got my same $4,500.
I'm going to change my outlook on this. My emails are going to start with, don't waste my mother effing time.
No. I don't want to waste your valuable time, Mr. Banker. So let me tell you what I need to win so I don't waste your time. And by the way, he's not going to want to, you have to look at it from a banker's perspective. Let me tell you something at the banker's perspective so people don't understand. A banker gets no credit if they deliver. They don't get a thank you, but if they mess up, they get slapped. That's what happens inside the bank. If you send in a deal and he starts working it, and it goes up to his boss, sees it, and his boss says, what happened to this deal? Where's this deal? Where's this deal? What happened? He doesn't either want to bring in a deal he's not going to tie up. He doesn't want to waste his time. People have this thing, they want to see a deal. Wait, they have no interest in wasting their time. All it does is a burden for him. His conversion rates drop at the bank. He loses his bonus. And people don't realize the other side of their regular. And by the way, corporate banker, you can ask him, how do you like to do business? They talk to regular people. People, oh, these bankers, God's gift to humanity. No, they have power, they have control, but they work just like me and you.
Ira, you mentioned earlier that typically loan brokers don't get paid until the deal closes. That's not always the case, right? There's a fair number of brokers that charge an upfront fee.
One thing I can tell you, if you have any mortgage broker that's charging you an upfront fee and a commission at closing, run as far as you can.
Okay, then what about brokers that want to charge an exclusive, or not charge, but make you sign an exclusive?
Worst thing in the world. Worst. When I was a regular broker, I never took an exclusive in my life. Basically, a broker wants an exclusive. What's the motivation? To work hard. It's over. See, let's go back to this whole idea when the deal's going to close, they get paid. Okay? When is the last deal, Ash, you worked on, Amanda, you worked on, that didn't close? Not a purchase. It might not buy the building. When's the last refi that didn't, might not close at that bank, but didn't close, period? Did it ever happen in your life?
Yeah. 2 months ago, we had an office deal The same lender I've been with for 20 years, they merged with another bank. They were basically acquired by a much larger bank. My guy, again, for 20 years, did a ton of my deals, brought him an office property for $3.5 million. He's like, oh, this should be easy. No problem. Your track record, your liquidity, we'll get it done. 2 days later, I get a call back saying, hey, sorry, this new bank doesn't want to do any office whatsoever.
Okay. So but that didn't happen in this bank. But is that deal going to close at a different bank?
We ended up paying cash.
But if
we
you
were under the time crunch.
Right. So but that was a purchase. Every single deal, but there's a lender after that deal. So there's always going to be a lender ready to close every single deal. So that's why I tell people the fact that, a broker only gets paid at closing. Today, every deal's closing. Right? Sometimes my broker's motivated. What is he motivated for? He's motivated to accept his offer. If he brings you a 6% rate and he really has a 5.75% rate from a different bank, but that bank has a lot more paperwork and you're happy at 6, he's not bringing the 5.75%. He has no motivation to even tell you about that bank. The motives aren't fully aligned. Okay? So that's why I say when a broker, to give an exclusive is the worst thing in the world. Now, what does make sense, you have a complicated deal, put a big package together, all this stuff, then I can understand where you give it to a broker, listen, it's yours to lose. If you do the deal, I'll give you a last look. Then it makes sense. So brokers are listening. If we don't end up doing it, I'm spending a lot of time on the package. So if at the end of the day I'm in the ballpark and you go somewhere else, I want a breakage fee. That can make sense, but exclusive is the worst thing in the world for an owner, period. That's why I have some people come to me first now. I have people who are married to the brokers. Here's the story. $4,500, you shop the market. Bring me back the term sheet. Then go with my term sheet to your broker. Say, hey, I'll give you, could you beat it? And take it from there.
Yeah, best ever listeners, this is really valuable because, again, I've heard of a lot of brokers charging upfront fees. And Ira's example is if they're doing a ton of work, yes, they should be compensated a little bit, but do not sign an exclusive. Now, another one they try to pull is I've seen where some brokers want to own the relationship. You mentioned earlier, if you introduce us to this bank that got the deal done, we can continue to do deals with them in the future. We don't have to say, hey, Ira, what's your commission? But there's a fair number of brokers that want to own a lending relationship. Another big red flag, right?
Yeah. So I want to just also clarify, my fee is upfront. So when I say upfront is a flag, my fee is upfront. So if someone says, at $4,500, none of the people taking upfront fees are taking $4,500. They're taking $25,000. They're taking commissions paid upfront. I'm charging for my time. And I charge you after a look and there's nothing at closing. This is my fee. I tell someone, if you want to pay a success fee, go to a broker. I'll refer you to a broker. If this is a product, I can pay you an attorney. So I want to put that in perspective. But the answer about the relationship long term is that's the same story, is that it makes sense maybe if I found you a bank you didn't know about, and they say I'm going to bring you this bank and maybe the second deal also, the third, you could hear that. They go into the same stable of banks that exist in the marketplace. Like the whole thing, this is why people are irritated. They want to start going direct. So that's why the firm I was at, that I started before this, Eastern Union, top tier brokers, they only take a fee at closing. They're not locking you into 4 million things. If what they want in good faith is if you're going to use a broker, don't look to cut me out. That's a fair request, but lock it in just blatantly. I don't see it.
Ash and Ira, what is the protocol? If a broker points me to a bank, they were not on my radar, and next time I want to use them for lending, should I engage the broker again?
So it's a tough question. If you'd call me up and say the broker found me somebody new, I have a relationship with the broker. They brought me somebody new. The bank wants to deal with me direct. I'm ready to deal with them direct. I only know about them from the first broker. I would say you could say a tail. There should be maybe a little bit of a reduced commission paid for the first year. You have to work into the deal. That can make sense. Now, if you sprinkle into it that, hey, I got to a broker, I got to bank A from this broker, but now bank B wants to bring you to the broker, then nothing goes back to the first broker. Meaning, if your way to get into that bank again has nothing to do with that first broker, then they're not tied to it. It gets gray when the bank says I wasn't going to meet you at a show anyway. No, those are gray areas. That's why I tell people, when I was a broker, a client had 100,000 reasons for a $100,000 fee to get rid of me. At $4,500, he's not looking to get rid of me. People ask me, why do you let the person go direct officially? Because if you want to appreciate what I bring to the table, every deal you do, you want me in the loop to keep everybody in check. That check on Ash, the deal that didn't close, what was the purchase price?
3.5.
Right. So you take a $2.5 million mortgage even on that deal. I save you 5 basis points a year. You're more than recouped your $4,500. So it's not like a big ask. I'll tell you an interesting story. Someone called me up with a $300,000 deal, a USDA deal in Chicago. And I said, you're going to pay me $4,500 relatively upfront. Like, I know I could do this. I told you what I could do. And stop at term sheet. Why don't you go to a broker? The whole thing doesn't make sense. It's a lot of money, 1.5. He says, Ira, you don't understand. I said, okay, educate me. I'm always listening. He says, I'm based in Chicago. I have a business. This happens to be a property I own. What's my alternative? I don't know what I'm doing. I'm going to go to a mortgage company. They have a minimum fee, 10, 15, 20 grand. Who's going to be motivated to work on a $300,000 loan? The broker they hired yesterday, right out of college. Your guy gets the same guy working on a $3 million or $300 million deal is working on my deal. He gets a 10% bonus as long as I'm happy. He doesn't care how many zeros are in the loan amount. So you have it wrong. Now, I did $1 million deal for somebody. We saved the guy a quarter point a year and like almost nothing because no one's really working hard for him. No one focuses aggressively on $1 million. That's $12,500 over 5 years. That's almost a 3x return on his money. So it's a whole different perspective how they're looking at it. They're paying for the time and expertise to keep everybody in check of what's going on.
Amanda, to answer your earlier question about owning a relationship, we had a realtor, a commercial broker, who was listing a property. We ended up buying it, and they said, hey, talk to this lender. It was out of state. Talk to this lender. They should be able to get it done. They got the deal done. Over the years, we've done 3 or 4 more deals with that lender. And as we're selling that initial property, the real estate broker found out that we've done all these deals with him, try to come back to us. We didn't pay him commission on the first one. He's not a loan broker. But now he claims he owns that relationship with the lender. We went to the lender. We're like, hey, what's the deal with this guy? The guy tell him to piss off. So, but I think it's important.
He was just the real estate broker who should be offering lending advice. Correct. Because that gets his deals done anyways, wanted to take a cut also. He must be not doing that successfully as a real estate investor if he's worried about some mortgage broker commission.
That was dirty. But it's important for best ever listeners to look at what you sign when you engage with a lending broker. If there's some exclusivity in there, find a way to negotiate that out, kind of like a prepayment penalty, right? Or like a lease renewal. Brokers, sometimes real estate brokers want commission on lease renewals, but it's a abbreviated commission, maybe 50%. If the broker engages with you again with that lender, by all means, pay them. If they do a good job, take care of them. They'll help you out in the future, right? Everybody in this business that treats brokers, lenders, real estate people as commodities, you're going to have a short run. These are all partners, and you want to treat them that way. But Ira, while I'm shitting on brokers, I want to throw some heat your way. If I pay you $4,500, how do I know you're going to work as hard as you say you're going to work?
Great question. So the answer to the question is that it's not. If you think it's about hard, again, you're not understanding what we're doing. If you think it's about hard work and all those pieces of the puzzle, then you got to go to a broker successfully. It's a regular professional work. $4,500 sounds cheap, right? Because you're used to paying 20 grand. The reality is, if I called you up and said, hey, you're leasing a car tomorrow, you want me to call 20 dealers for you and see if I get you a better price? I'm charging $4,500. You're going to say, go to hell. Even though I'm going to work hard. You're going to say, I'll pay maybe $500, $1,000. How many phone calls are going to take? I'm only able to charge $4,500 because people are paying $100,000 to the broker. So really, these guys, and it's only 10 hours of work. I'm making more than an attorney per hour. It's only 10. So it's really a pain. It's like, I tell people, think of me as a job. Would you hire, you meet my senior broker. That's what the first look you meet. You're like you're interviewing them. Would you hire that person? If you would hire them, then engage them. I'm no different than a due diligence firm, no different than an attorney. That's what the process is. Once you think you need more than that, go to your broker and look at, that's what I call myself, mortgage assurance. And it's the steps. And if you think it's not, I'm not going to work hard, I actually tell people, I start the conversation, why don't you take my $5.99 a month, cancel anytime, and have your secretary call up and see what happens. And then it might work. I think it will work. People can't believe it. Did you ever try calling a bank yourself? Yeah, it worked.
Another issue with brokers is we've successfully used lending brokers in the past, and then we'll find a deal halfway across the country, and we'll ask them if they can do the deal. Every one of them will always say, oh yeah, I've got some contacts down there, even though they don't, right? They just want to figure out if they can make money on our next deal. You've got contacts, you've got data from across the country. Is that right?
Yeah, so just think about it. That guy you spoke to, he's not lying to you. He could be subscribing to my data and he has it. It's not rocket
This
science.
was years ago, man. Your
No,
data
it's
wasn't
not
out
rocket
back
science, but
then.
you go to Google. If you go to Google today, it'll give you a list of banks. There's sources to buy data on banks. And the difference is you won't have the correct phone number, so spend more time. It's a time issue. See, it used to be about a relationship, that you need a relationship to get a deal done. You don't need a relationship to get a deal done. You call up a straight up bank for the first time, say, my name is Ash, I own 20 buildings, 5 buildings, 15 buildings. I want to do business with you. You know what's going to happen? They'll talk to you. That's how you build a relationship. You have a relationship with your gardener, right? Everything's in range, you're not going to leave him. But if he really messes up, we already got a crazy different price, you'll call him up, awkward comment. It's a relate. They're people. It's a relationship. If it doesn't fit that box, like this guy's 20-year banker, he can't. That's the crazy part about banking. They have a box. It doesn't fit the box. You could be work with them for 25 years. It's not making a difference. No one can make it happen. And for every weird story that a guy got you a favor, like ask your broker, did you ever get retraded? Guy goes, yeah. Well, what do you mean? I paid you. You're this magic broker. How did you get retraded? They're not magicians. This is just a professional way of doing business.
What kind of time do you need to get a deal done or to get a term sheet? Because right now it seems like cash, quick close wins a lot of deals. So from beginning to end on a value add deal, how much time do you need to provide a term sheet?
So you just asked a broad question. To get a term sheet is normally not more than 2 to 3 days max on a deal. That's not magic. You know which banks are going to get a term sheet right away. How long it takes to close and the due diligence take a longer time. Like I started doing these TikTok videos, and one of the things on real estate I say is it's tough to get loans. It's not tough to get loans if you reset to today's world. If you just bought an office building for $3.5 million, or you're looking for a loan based on the old metrics of office buildings, you're in trouble. But if you paid $3.5 million for a deal, really a couple of years ago it sold for $6 million, and you realize banks only get lending 65%, and that's your expectation, it's easy to get that loan, right? Now, with that being the case, now talk about speed of close. If you have to close fast on that $3.5 million deal, then you go to a bridge lender and pay 8, 9, 10, 11, 12%. Those lenders could close from a week to a month to 2 months. You want to go to a regular bank, it's going to take longer. So some people get the extension. Some people close all cash until they get it. Some people do a bridge loan to close bridge and then they refinance out. But these are all the topic points of the conversation.
How quickly can you get a bridge loan?
That's to close a bridge loan?
Yeah.
You could get it, depending on the rate, you get a bridge loan from 2 weeks to 6 to 8 weeks. If you're coming in double-digit rates.
No, sorry. Not how long, but if I call you and say, hey, I need $2 million in 10 days, is that doable?
Yes. The answer is, obviously, it depends on the collateral and the leverage, but yes. The difference is that if you're looking for that kind of speed, you're basically, the person who's basically lending you that money is someone exactly like you, but would rather not buy the building at $2.5 million, would rather be the lender at $1.8 million, and would rather make 12% and close like this. Just like you went to contract within a day at $2.5 million. This person's saying, if you want $2.5 million, I'll lend you $1.8 million to $2 million, but I want 12%. They're basically like your partner without equity. You pay them the 12% for the couple of months they'll be there, and then you get rid of them on a refi. So those are the speed lenders, and there's a lot of that money because there's a lot of people like yourself that are sitting on money, don't want to transact at $200 million. They think the market's going to fall. They could buy. There's always people wait for those opportunities. That if you have a longer horizon, it's not, first of all, deals a little bit larger. There's more people willing to put out that money. And if you have a little more time, then the rates start coming to the high single digits.
All right, Amanda, I'm going to try to take his knees out. You ready? So, Ira, for the $4,500, does that mean you would get me a bridge lender because I signed a contract, I was out above my skis, and I need $2 million in 10 days. Will you get me the bridge lender, and then will you also work on the term sheet during and after that process?
No, so each transaction is $4,500. Now, so what some people do, and I tell them it's fine, they could do it, is that I just did a deal with someone, said, do me a favor, can you today shop the deal to a bridge lender for me and a regular bank offer, bring me all my offers. And I did that. He paid me once, and he went down the line with the bridge lender. So we wrapped it up, and then he was able to take my data and go to the bank to take it out and say, you know something, thank you very much. This would have been the best bank we go to. I'll just finish myself from there, no problem. And he called the bank, can I have a term sheet on the deal? Totally fine. Like, there's no awkwardness. It's not like, oh my gosh, don't tell Ira, we're going to call his banker. If you want me to then go to that bank and say, hey, could you take out the bridge lender and work it? You're paying for that time.
I was trying to get a 2-for-1. That didn't happen.
I understood.
All right. So if I were to
At
do
$4,500, I tell people I don't have time. I don't have option for 2-for-1. I'm not chasing you for the fee. I can't wait to the closing table. That's why it works. If you want me to wait to the closing table at concept, then yeah, pay me a regular commission. I'll do it all day long. That's my whole career.
For some folks in our audience that do the safe, triple net, 5-6 cap deals, do you also do CMBS and insurance loans?
Yes, I'm doing all, and we're doing credit unions, life companies, you name it, across the gamut. We're dealing with
not agency debt, though, I assume.
Agency also, Fannie Mae, Freddie, the same thing. There's no once you fully understand, there's really a data and a professional time play. It's all the same. In theory, I could do car loans, but I don't spend my time doing that. But it's the same process, the same. I'm doing healthcare. It doesn't make a difference the asset class. I'm from land to construction to you name it, we're doing it. It's the same. Once I have a database and once I know which banks to call, it's not. There's no. I tell people you could do it yourself. Like I'm thinking about giving a master class and teaching people how to go to the bank themselves. That's the business. It's not rocket science.
How often are you unable to get a term sheet?
So I would like to phrase the question a little different. I don't have a time that we mismanage an expectation of what I can't get done. So someone once called me with a deal that I said, listen here, I don't think I could get this for you. But the person was desperate. I said, listen, if you, I'm going to change the contract. I don't think I could get you what you want. But because I have 60 lenders that potentially might do it, you want me to call them, but I don't think we can see success. So whether I deliver the term sheet or not, I deliver what I promised them. So that's why it starts with a free look. And someone told me someone quoted this big rabbi that says, there's two people you don't want to lie to. You don't want to lie to your doctor and to your lawyer, because then they're treating the wrong patient. So I start with, you send me the deal. We're on the same team. Tell me what you have and what you really like to get to. And then my senior broker will tell you what we think we could do. 20% of the time, I'm telling you, don't have FOMO. What you have is great, just go with it and close. 80% of the time, he'll tell you what we can do better. You just make a judgment call. Is it worth it, the timing, to go make that decision to move forward? So it's about managing of your expectation. The name of the company is GParency, GP, General Partner, and Transparency. So our people sometimes get frustrated. Well, I was hoping that, what did we say up front? And that's the key part of it. I manage the expectations up front, what's supposed to happen. So that's why when in my contract, it also says, irrelevant to who you spoke to before this, it starts whatever you told to Ami, who's the senior broker. Because a lot of times someone may have spoke to a salesperson. I told the guy I had bad credit, and Ami, you didn't tell to Ami. So I reset. Someone's interested, they get on the phone with the senior broker, tell the story about the deal from the beginning. He listens to it, he tells you what he could do, and we walk forward from this. So my goal is that every person who calls has an amazing experience and their expectations managed. Are they sore losers no matter what? Unfortunately, I have to deal with them. Life throws you those tests every once in a while.
It's easy that's not easy. It's more accessible to find lending data on who's lending on particular assets. How do you know who's got the appetite for a refi, a cash out refi?
It's the same type of situation. So that's where the example is. That's where the example becomes, where because I'm doing a deal and this lender says, I'm not going to lend you cash out, so you can't, and I'm not going to bring it there. But if you really break it down, going back to my data, like someone who just purchased the data, right? They said there's filters there. And the filters don't go down to the city level. It stays at the state level. He goes, I want filters that tell me which lenders claim they're going to. If you want to know which banks close in your city, it's one thing. Which banks claim they'll close in a city? It doesn't work that way. The banks don't live. It's a blend of a science and an art. So the system, the algorithm we use, just labels of the 172 lenders that possibly want to lend it. We have an algorithm to sort it. So you don't have to call all 172 and find out that the right lender is 170. The odds are the top one should be at the beginning. But it's a phone call. It's a teaser. So I tell people, it's not about putting the deal together. If you want a real trade secret, the real trade secret is as follows. There's always a deal breaker in every deal. You're looking for non-recourse. You're looking for 70% leverage on office. You're looking for something. So I don't even send the deal in sometimes. I send the lender, would you ever go 70% on office? The answer is no. If it's the greatest office story, would you ever go there? If your answer is no, don't waste your time telling me a story. So some people write, would you go to 70%? They write back, it depends. The greatest, it depends. No, the best story. So I learned how to ask the question as a teaser. I try to get down, what's the deal breaker? And we focus on the deal breaker. Why are you nervous? What's your FOMO? You tell me the FOMO you have, then I could go out and work on that and ask the banks that question. But Amanda, I did the same thing. But the reason why people say, why did you switch from commercial and broker to this? The reason I went here is because the same honesty that I could have here, I operate as a broker. I won't get paid when I closed. But so many times, my motives weren't aligned. Like, give me a shot. Like, I have nothing to... And also, I saw more and more people going direct. So I said, this is like the perfect thing for me. I could be getting paid a fee. I have no ulterior motive. I can tell you everything that I think. And no one's ever going to come back. I misled them. I'm not even tested if I should mislead you. There's no... My motive is, I'm judged by, you want to get the best financing? I'll guarantee the best. And that my guarantee is if you go through the process with me, and after you sign up a deal, a new bank out of left field comes in with better, and you close with them, I'll give you back your 4,500. And it never happened yet.
Wait a minute. Say that again.
I have a money back guarantee, right? What am I basically guaranteeing to you? If you go through the process with me, which is, let's say you have a broker. Your broker goes to 5 banks. I go to 20 banks. We shop the market. We bring you back a term sheet together. It could be his term sheet, but through the process, I advise you how to negotiate that term sheet, and you sign a term sheet with bank number 1. You sign up, and then out of left field, you're talking to someone calls you from your podcast and says, hey, by the way, you have this building? There's a lender number 73. They'll give you a better offer. And they call you up and they actually give you better offers. You call up the bank that I brought you and say, hey, put on hold, I'm switching banks. And the new bank go to and they actually close the deal. That means I should have found 73 through the process, right? And we didn't, you get your money back.
So if we or another broker gets a better term sheet than you provided?
No, not that I provided. You're engaging me as mortgage assurance for the process, right? What I believe I'm bringing to the table is you're about to go with Joe the broker. And I know that if I'm involved in the loop, by the time you're finished, the final best bank, whether it's mine, his, creating competition, when the final of this whole process is the best, I guarantee you this process will bring you the best deal. That after you move forward, no one from the outside will come back to you and say, hey, I have another bank for you. It will never happen.
And just to confirm, the best deal means best terms and rate, not necessarily...
By the way, no fine print. Bottom line is that if we went to 27 banks and you sign up and you find bank number 73 and you decide it's better, even though I think you're crazy, you lost your mind, it's not better, doesn't make a difference. If you end up walking from a bank we went with, that you signed up because of us, to a brand new bank, and they close you, you get back your money. No fine print. I don't want to get in fights with people later. I just know it doesn't. If it happens, you should get your money back. But so far, that didn't happen. What did happen a lot of times, the guy goes, I was hoping to get $9 million, and your best offer is 8.5. I think, they didn't offer you more than 8.5? No. So you're living in dreamland. Like, so I told the guy up front, you can have expectations, but tell me what your expectations are so I can manage them up front.
I'm with you, man. I'm trying to get that money back.
Yeah.
Just want to make sure I understand the terms here.
No.
All right, this has been a fascinating conversation. I swear I've thought, this will be a 20-minute conversation. There's no way we can talk about mortgage brokerage for 45 minutes, but I really appreciate everything you've brought today and your willingness to just call it like it is. If best ever listeners want to reach out to you, what's the best way? So the best way is I have email is IRZ at GParency, IRAZ at GParency, GPARENCY.com. And I give it my cell number, 917-597-2197, WhatsApp, or if you, instead of calling today, and I tell people to leave me voice notes on, or LinkedIn they can go to, but voice notes on WhatsApp. I look at WhatsApp voice notes as a conversation with the ability to pause in between responses. So why should I talk to you after right now, give you the answer? I can wait a few minutes and think about it and respond. And it's just a conversation on delay sometimes. So I get a lot of, but by the way, we didn't speak about mortgages. We spoke about how you get the best financing. If you really think about this show is how do you make sure you get the best financing? How do you create the right blend of competition? Talking to lenders, just managing, that's really what it's about. That's really what the key is about. Best ever listeners, thank you for joining in today. If you enjoyed this episode, make sure you leave us a 5-star review and share it with somebody who could find it useful. Please follow, subscribe, and of course, have a best ever day.